my name is Nick B, and let's get into this week's futures overview. As always, starting with the Forex Factory Economic Calendar, it's going to be a little bit of a busy week. Monday, we don't have much happening, but Tuesday, consumer confidence at 10 a.m. and JOLTS job openings at 10 a.m. Wednesday, we have ADP non-farm employment change at 8:15, 8:30. We have advanced GDP. That's going to be big on Wednesday. Then we have pending home sales, crude oil inventories. Wednesday's going to be a busy day. Thursday, we have 8:30 a.m. core PCE price index, employment cost index, and unemployment claims at 8:30 a.m. Then it's a chill day, and then Friday we ended off with NFP non-farm payrolls, unemployment rate, and at 10 a.m. we have ISM manufacturing PMI. So it's going to be busy, and slowly from the last 2 weeks we've been working our way out of the current range. So let's talk about it. Let me get rid of this, and as always, we'll start with ES. ES has been an absolute monster. Now, we have been seeing a little bit of a slowdown in price action where there is this feeling of uncertainty. Can we go any higher? And really, the best friend that we've had is the daily 20 EMA that's supporting price above it. So we closed right above that 20, but you can see we're kind of starting to hunch over. Volume's been kind of slowing down. And this is the floor that we're in now, 59.27. Oops. 59.27, and then this wick out here was at what, 5800 last week. So let's see, the 20-day EMA is 58.30. So the right away what we can kind of deduce here is if we break below 5800, that's going to open us up to maybe some previous higher lows we're going to take a look at on the smaller time frames. But my automatic assumption, if you will, is I'm paying attention to where my 50-day on the daily is, and that's at 57.32. I'm not going to make it the target if we break below it, but it's going to give me a pretty good idea of maybe we have some support in that area previously. So below 5800, maybe a stop at 5810. I wouldn't even give ES more than a 20-point stop, really. Even though it's been very volatile, especially last week, moves of up 40 points, down 40 points. But 58.20, maybe a 20-point stop. And your target, well, we'll take a look at that right now. So let me see on the 4-hour. All right, so we're dropping down a bit. I mean, you have a wick out. 1 second. 57.80. 57.80 would be an ideal first target. Below 57.80, I mean, you have nothing but, oh, look at that, 57.25. So that 50-day EMA on the daily confirmed to me that maybe 57.30 is not so bad of a target. If 5800 breaks, you could risk 20 points on that, and that's a sizable move to the downside if it unfolds really quickly. We'll see what we get. There's a lot of economic data, but in terms of upside, the key level for me that I've noticed, especially from last week, is 5900. Psychologically, it holds all that supply. If we can get a breach of 5900 and get above the highs of 59.27, ideally I'd begin targeting 59.50 to the upside, 59.60, 59.80, and maybe into the second week of November, maybe third week, maybe sooner, we'll see 6,000 on ES. That's more of where I'm leaning towards. But again, it is possible Tuesday comes around and we might just test some supports. Maybe we come down here. I don't always trust wicks. And the other thing is, at the end of the day, is this is still range bound action. At the end of the day, the floor that we're in between 5800 and 59.27, unless we get above or below, you're not really getting any real moves. My other concern is on the 4-hour and on the 1-hour. When price is in between these exponential moving averages, I noticed that price doesn't really keep up consistency. It's really either or on which direction we might take on. So because of that, it just gives me a little more confidence that we can see the top end of the floor and the bottom end of the floor. Unless we get a breakout or a breakdown, really, you're just timing price action in between. Not a bad idea for scalping, but not my cup of tea, let's say. Breaking this down on the 1-hour, you can see this is crazy. I mean, the floor stems from really your session highs of 5900, that magic level for me. And then if we get below 58.34 or the wick of 58.20, get down to 58.10, 58.15, the assumption is we're going to melt down lower, but really 5800, that breakdown confirms it. Because isn't it odd, last week we came down to 5800, we bounced right off of it. We wicked it, came back to previous session highs of 5900, could not sustain it, and then sold off again. So we're getting there. We're getting there. On the 1 hour also, we're not in between the moving averages. We're below them. So it is hinting at possibly seeing more downside. Again, wishy-washy action here. One thing I could do that I like to do is maybe take a fib, take a look at if the floor is from 59.27 to 5800, what can price tell us on the in-between? So, okay. So we went from the 38.2, got to the 50, sold back down to 23.6, and completed the fib all the way up to 78.6. 5900 is a key level, 5880, 5860, 5850, and then 5830. Now, that's a nice guide, but again, we've completed it. When we had this meltdown from the highs and we decided that 5800 was the low, this technically also invalidates the fib for me, because we already completed the move up, down, we completed the move. And what happens when you try to replay those levels? You get chopped alive. It's a clean 50-50. So again, this just confirms to me, hey man, just wait for 59.27 or 5800. The in between, that's rough pickings, unless you're scalping it for a quick 5-10 points. Great, 20 points, especially if ES keeps that volatility that it had from last week. So that's what ES. Nothing on the in-between that I can pick out. Let's go on over to NQ. Yeah, keep it simple. What you see is what you see. If you are looking for something and you don't see much, leave it alone. So that's all I had for ES. For NQ though, let's see. Still bullish. Looks great. Data looks great. The candle, the daily candle. Okay, so some argue that this is a possible bearish candle pattern. Very possible. Yes, absolutely. And same thing with the price action like on ES. We're holding the daily 20 EMA, but if we were to close below it, which is 20,296, 20,300, if we get a breakdown of that level, that's going to open us up towards the wick of 20,073. And our 50-day EMA is more or less 20,000. 19,975. That really, it's 20,000 at that point. Okay, now what floor are we in between here? Because we still have the July highs to get above. Let's break it down. All right, so we made new highs last week of session highs of 20,707. It was. You have your first. Wow, this range is. I would plot it honestly from 19,800 to currently, from how we're looking, from 19,800 to 20,700. Okay, we'll narrow this down. So the 20-day is at 20,300. Let's take a look at the possibilities in between. Before I do that, on the big picture, what I see is if we get above 20,700, 707 it is, we're going to be heading towards 20,800. Not a problem. Easy. That's a breakout. If we get above 20,800, you're going to go for 20,000 psychologically. 900, 950, but really your target above 800, as long as it holds, is 20,983. As soon as we can get above that, 21,000 is coming, 21,250, 21,500. NQ is a little bit delayed compared to ES. ES is way ahead right now. I believe it's up 110 points from its July highs. Meanwhile, NQ is still, 2-3% behind from its July highs. Okay. Let's take a look at this on the 4-hour. All right, so this is a little, this action is so not nice. Okay, so we had a few wicks and no candles closed below this area here. And what's this area? 20,000. It's 20,200. Okay, so that would be our midline here from what I understand. Very, very tough to kind of dissect what's going on here, especially on the intraday. Let me put this up on the 1-hour. I'll be honest, I'm not seeing much here. So the 1-hour is below the 20-day. We're still above the 50. They're very tight knit together. Chop. This kind of throws me back to, hey, let's pay attention to what happened last week. So last week we had a bit of a struggle on Thursday at 20,430. And we had this flush down to 20,077. I think this is the bottom. I really want to say we do not revisit this area, but again, anything goes. I've been wrong before. Um, Ultimately, though, again, I'm still leaning bullish at this point. I would say into this week, even with all the data, we're going to end up above 20,700. I mean, where would the bearishness come from? Where would the fear come from? Maybe the argument is to retest some of the supports that we've had, but we've retested most of them. And out of all the carving that price has done, this is just chop at the end of the day. So looking at this to simplify it, really, I would go along at 20,710. My stop would be at 20,680 because, or slightly below, maybe 650, because those were our previous session highs, 20,680 right here. Oops, excuse me. No, it wasn't. What's going on? One second. Oh, it was. I'm so sorry. Right here in October, beginning of October, those were our previous session highs. So I would put the stop slightly below it. 20,710 comes around. It's a clean breakout. It's going to go for 800. We could ride it out higher. I understand that we're leaving maybe 300 or so points on the table, not even 250. We're leaving 250 points, but to leave 250 points on the table for some peace of mind, I'll trade that any day of the week because, again, there's not too much here to dissect. This would be wonderful, though, I believe, for the smaller time frames if you wanted to scalp maybe 10, 20 points. I wouldn't necessarily play it between the moving averages either because, again, your odds are 50-50 every time it's in there. But let's say we can get above 20,522. That's your 20-day EMA on the 15-minute. You could take a stab long and you have from 22, realistically, you have 20, 30 points that you can probably guarantee yourself to the upside. But again, that's risky business. Most times on those type of setups, your risk to reward isn't the cleanest. But if it goes your way, it's a great shot. Again, not interested. I want something clean. Give me a breakout, give me a breakdown. And the more I'm looking at this here in the in between, I'm not liking this action. I do like the idea that maybe if I take a fib from 20,079 and draw it up to 20,707, we just started pulling back from last week. So 23.6 is at 20,557. Okay, we came down to the 38.2% retracement, which is 20,466. Now, this is an example of a fib that we could play because of the fact that we're using previous history that we didn't go through, like similar to what we looked at on ES, because ES already completed its path through all those golden levels, as we call them on the fib. It kind of invalidates future reference for price. But with NQ, we just went from the lows to the highs here. This makes a little more sense to me and kind of gives me a clean cut idea that, hey, if we can get below 20,466, it's going to expose us down towards possibly 20,400, below 20,392. You could take a look at targeting 20,317. Now, this would be wonderful on chance taking. The reason I say that is because what if price decides to, in this range, flip? Let's say we get a break of 2466. We come down towards 20,420. We don't quite reach 400 and it flips. Those are the possible scenarios to play out. But the better definition for it is that's the risk that you're taking on here, that it's a chance. You might get that breakdown, you might get that breakout, you might get that bounce. And again, the only reason I'm really kind of putting more focus on that is because at the end of the day, when you look at this on the 1 hour, on the 4 hour, on the daily, it's clear as day. We've been chopping the last 2 weeks, so we need that breakout. Even though we had a great push last week, it was a breakout, wonderful. It was a squeeze, more or less. It really was a squeeze job. You could see everyone just ran. They took their profits at 700 and they ran. Some shorted from there. So we need to see where this week opens us up. Let's see how Sunday treats us into the overnight, into Monday. Monday's going to be a quiet day. if anything, pre-market, we might be able to see kind of an idea of what it is price wants to do, and we'll go from there. Now, the other thing to keep in mind is most of the economic data, it's all been really good. And we have quite a few main events. So let's see. Dollar. This is a concern for me for this week, too. I would like to see a little bit of a weaker dollar. The stronger it gets, the more possible downside we'll see on equities. Um, wow, we're back at 104.30. I mean, get us below at least. I still have my alert at 102.75, 76. That's the ideal level. If we could come back to that area, that'd be ideal for everyone. But if this keeps going up and up and up, very possible that we end up revisiting 5,800. But why I'm still leaning towards bullishness is because we experienced this before many times, and especially last year in 2023 when it was October, November seasonality, where we had one big spook uh, right before November began, and that was the bottom. So if this was the spook that we had last week on Wednesday when we sold off, technically, as long as we don't revisit those supports, that would be the bottom, and we should be heading higher. Should. We'll see seasonally how it goes. It's going to be great, especially 2025. Heading into it. What else do we have on the roster? I think elections, but that's next week. And once that's out of the way, I mean, that's really going to seal the deal on where we're going to go. Statistically, historically, it tends to get very bullish. A great book to kind of have on the side also is the stock market almanac. They make one for each year, 2024. They'll have one for 2025. Now, it gives you an idea of historically how price action has behaved in the past before, and it's a neat tool to get an idea of where it is we might go. So they said that maybe Tuesday might be a little bit bearish, maybe Wednesday or Thursday is going to be bullish, but with this price action here, again, looking at it for what it is, unless we get out of these ranges, I really should not be touching this. That's how I get burned. So with that said, let's see what kind of breakdowns we get, and we'll go from there. Um, I say stay bullish, and we'll see where the week takes us. Have a great trading week, and we'll see you on the next one. Cheers.